Hello and welcome to this new video. Today, I'll show you why the Nvidia stock will correct and where I'll set my entry zone. In detail, this video will first cover the general financial data and risks, then we'll look at my price targets on the chart and how much the stock will correct exactly. And in the middle of the video, I'll announce a giveaway. Let's start. Nvidia has seen a very strong entry in the last 2 years, and not without reason. Due to the AI hype, Nvidia was even briefly the most valuable company in the world. Its market capitalization today is $3.1 trillion US. Many wonder if this valuation is justified. Now, let's look at the general financial data. First, I want to show the PE and PS ratios. The revenue is almost $80 billion US, and earnings are $45.6 billion US. The PE ratio is 71.5 and the PS ratio is 38.2, which is slightly overvalued for such a strongly growing company. It would be good for the stock to correct. I'll explain later why and what reasons there could be. I would buy Nvidia at a PE ratio below 60, which would be a very good valuation. Now let's look at the PB ratio, or price-to-book ratio, which is 62, which is actually quite high. I would also buy it at a discount when the correction I anticipate comes. Now let's compare Nvidia with its competitors. The competitors also have a very large market dominance. For example, Texas Instruments, Qualcomm, Analog Devices, Broadcom. Many analysts and I see a very strong correction for Broadcom, which will be more than 50%. If you want a video about this, you can write it in the comments and subscribe for more informative analyses, and write more companies or cryptos in the comments. Broadcom is, in my opinion, a very overvalued company. For example, Texas Instruments is quite undervalued. Now, let's look at the future prospects. The future prospects are that it will grow 25.7% in profit and 23.2% in EPS, which is quite a lot. But of course, the market expects not only that 25.7% will be achieved, but it should of course beat expectations. Now, let's look at the analysts' forecasts. The analysts' forecast is that we will have revenue of over $120 billion by January 31st, 2025. And by 2027, we will have revenue of $184.45 billion, which represents a good outlook. Now let's look at the future prospects for return on equity. When compared to the industry, it's 14.6% and Nvidia has 80.3%, which is very strong. Now let's look at where most of the revenue comes from. Most of the revenue comes from AI chips and data centers, which are sold to Microsoft or other large companies. A small part of it comes from graphics, that is gaming GPUs. Nvidia could run into some problems if there's a ban on deliveries to China. It would be a significant decline for Nvidia. Then let's look at today's returns on equity. The market is still at 14.6%. Right now, the company has 86.7% returns on equity. Return on assets is 54.2%, which is significantly higher than the market average. Return on capital employed is also well above the market average. Let's look at one of the most important things, health. Nvidia's health actually looks pretty good. Cash, equity, and assets are quite high and debt is not too high. Now, let's look at what I think is a very exciting part, management and insider sales. Management, the CEO of Nvidia, is one of the best CEOs known. He has often shown how to deal with various things. There have been many sales in these quarters. It wouldn't be a bad sign if it was little, but we're talking about larger sums here. Let's look at a very interesting statistic. The statistic shows who holds the most shares. It's the famous names Vanguard and BlackRock who hold the most, but Nvidia's CEO, Jensen Huang, holds 3.52%, which is still in the top 5, which is very important. And now let's look at the risks. The risks are that if there should be a ban on China, Nvidia will have a revenue decline of at least $6 billion without considering future expectations. If this happens, Nvidia would have to lower its expectations, which would put pressure on the stock. I can imagine that Nvidia will slightly miss this quarter, or not beat expectations as strongly as the other times. If this happens, we could expect a 10% decline in one day. This is just my opinion. It should not be investment advice. It could also be good, which I consider very likely, that they reallocate their money. So it flows out of a stock that has performed strongly and flows into a stock that has performed weakly. Many of the affected stocks that smart money has bought or will buy are already in our YouTube portfolio. Now let's look at the chart. Before we look at the chart, briefly about the giveaway. The winner decides which financial instrument I should analyze. They can decide anything from stocks, indices, cryptos to example portfolios for a beginner or a recommendation from me on how to behave in this market. To participate, you only need to be subscribed and have written a comment about what you want and whether I should tell more in one part, about the short-term goals or more specific financial data. Now this chart is designed for short to medium term. So the first target zone here could be reached between 2 to 4 weeks, and the next target zone I will show could be reached between 1 to 3 months. Right now, we're at $125 per share after the split. I made a video about Nvidia some time ago, maybe 2 months ago, where I showed a total of 3 target zones, all of which were correct. I currently have a hit rate of almost 100% with Nvidia. I only had one wrong target zone, which wasn't bad because I went into a trade here with a very small amount. I used the last target zone to go short. The trade would have been more than 10% up at the lowest point, where I also realized small profits and are currently at a plus of 4.4%. I would also advise some people who didn't get in too early, but got in later in the stock, to sell at least $130 if they can't handle strong price fluctuations, because after that, we'll go short, which will go more than 30% without leverage calculated. My target zone is below edge $132 and upper edge $141. Before going short, you should also set a stop loss. I would recommend 2 types of stop loss here. First, if you want to take little risk, set a stop loss above $140, for example at $142. Second type, set it at $155, because above $155 my thesis would be wrong. It would be a potential fall of 13% to $150. The target zone will very likely hit. I don't know how the chart will develop. I could still make adjustments, up, down. That was my short-term view. Now let's look at my medium-term view, so between 1 to 3 months. My medium-term target zone is between $70 and $107. I don't think it will turn at $107, but it's still advisable that when it reaches this price target, you put it at the top of your watch list. There you would close your short position and go long with the stock or with a derivative. If it goes below $90 and especially below $86, many will say that the AI hype is over, before it will actually rise more. Then we could buy very strongly between $70 and $86, where I would of course buy very strongly in my private and in my YouTube portfolio. But calculated from the very bottom, at least seen downwards, which I don't expect, 20% would be possible. It will probably fall between 34% and 47%, where almost a 50% correction would take place, which would make a very good short candidate. With good management and an appropriate leverage, we would earn more than 100% on it. Now people are wondering what will happen when this correction is completed. When this correction is completed, we will see a doubling, which I consider to be between $200 and $250. From the probable short of $86 to $200 would already be 128%. The long rise fluctuation range is 20%. Don't forget the giveaway and write more stock ideas in the comments and subscribe. See you next time.